The IRS about the Paycheck Protection Program has been drawing a lot of criticism from taxpayers, from lawmakers, small business owners. It prevents them, business owners who have PPP loans, forgiven from claiming certain tax deductions. And some argue that really takes away all of the value of these loans. So let's talk about this more in depth now with financial expert Pete the Planner, who is joining us from his home studio. So there is a little bit of breaking news, pressure on the IRS from Congress, Pete, to make sure that that does not become a hindrance to the business owner who is relying on that and wanting to still get a tax break.
Yeah, first, it's important to note that I am not an accountant or a CPA. That's very important to note, although I'm not fun to talk to at parties either. The issue here is that although the PPP funds are not taxable income, if a business owner cannot write off the expenses used with that money, as my accountant puts it, that basically makes the income taxable. And so the argument from Congress here is they wrote the bill so that it would give a lot of benefit to a small business owner, not only for keeping people employed, but then to help restart their businesses. So the U.S. Treasury and Steve Mnuchin are saying, sorry, that's double dipping. We're not going to let you deduct expenses for money you didn't earn. And so I see both sides, Ray, but this is the head we're at right now.
Well, there's a bipartisan effort. Senator Chuck Grassley, for one, is saying that this was definitely not the intent here. We understand the rules are in place to prevent, as you said, the double dipping, but this is a totally different situation here, and it seems like as they are working through the next stimulus relief bill that they'll be able to address this and make sure that that does not become a negative, a knock against the small business owner. So do you think that that will have enough momentum to be able to be a benefit?
I do. My accountant doesn't, but I think that will matter. And to your earlier story about the PPP, here's the challenge. My business is basically all labor. We don't have a lot of overhead other than labor. But take a restaurant, very few labor costs. It's really about food and inventory and all those sorts of things. So the fact that businesses are structured different and their cash flow is different, that's why PPP is easy for some and really pointless for a restaurant, because they'll never make their way through that spending in 8 weeks.
Do you have concern about how, when this is all said and done, either way, if it does benefit the business owner, that's going to have an impact on, the American taxpayer?
It will have an impact on the American taxpayer, but the sort of the grand bargain here is that a small business owner will keep people employed, grow, hire more people. But I've just explained trickle-down economics, and people have debated that for decades. So,
Well, and you know what, Pete, you are still fun at a party, okay?
Oh, I'm not. I don't
get
invited.
At a party, but
I wouldn't go anyway.
Not right now, you wouldn't. All right,
No.
There you go. You enjoy that, and I will raise a cup to you as well. All right.